South Africa's consumer price index has come out at 4.1%. Economists say this is in line with expectations and should see the Reserve Bank keeping rates steady. This could be good news for consumers already burdened by increased fuel prices and high living costs. Miyelani Maluleke is an economist at ABSA and joins me now. Good evening, sir. Thanks very much for your time. But is this really good news for consumers?
Well, I think if you look at what the consumer has kind of had to deal with in these last couple of months, I think it is a bit of good news, because you'll remember when the budget was tabled, for instance, the National Treasury came out and they said we want to raise an additional 15 billion rands in revenue this year. And a big part of that is falling very directly on South African households. In March, we had a really big fuel price increase. So when you look at the underlying data and you see that things like food price inflation are continuing to ease, the fact that the inflation story remains relatively contained is a bit of good news.
But then, I mean, if you look at those buying cars, for example, vehicle prices are 3.5% higher than they were a year ago.
Yeah.
Now, that can't be good news.
That's right, but I think if you look at where vehicle price inflation tends to run in South Africa, which is typically quite a bit above the headline inflation rate, so the fact that we're seeing vehicle price inflation being lower, I think also quite clearly indicates that when you look at the inflation story relative to historical terms, price pressures in the South African economy right now are relatively contained indeed.
What does this mean for the mandate, of course, of the Reserve Bank, which is to contain inflation?
Yeah, it's important. You're absolutely right. They're meeting next week. They're going to tell us what they're going to decide on the interest rate on Thursday. Their mandate is to keep headline inflation between 3% and 6%. And a print of 4.1% is, of course, quite comfortably within that. But for the South African Reserve Bank's MPC, the most important thing is where inflation is going in the next 18 to 24 months. And the kinds of things that they will be assessing next week is what's going to be the effect of the 13.9% increase in electricity tariffs. What's going to be the impact of the fuel price increase that we're going to have in April, for instance, to inflation in the next 18 to 24 months. And in our assessment, although we see headline inflation at 4.1% now, we do think it's probably going to go a little bit higher, but we don't think it's going to breach the upper limit of the SARB's target range. And we think in the short term, the SARB does have some scope to keep the interest rate on hold, and we actually expect them to keep the repo rate unchanged next week.
Well, of course, I mean, as you know, I mean, some of the most notable drivers of costs for consumers are your medical insurance, as well as something you've just mentioned, which is transport.
Right. Yeah, that's right. So on the medical side, interestingly, this month CPI, the Stats SA actually did its annual survey of medical costs, and encouragingly, those were a little bit lower than the increase last year. And what you actually saw was medical services inflation also coming down a little bit. Although I have to say that that particular category was still rising quite a bit above the headline inflation, as we saw it at 4.1. It was still quite a bit above 5%. On the transport side, I have to say that it looks like there is some more pain coming through in April. When you look at the under-recovery rate for fuel prices just this month, it looks like for unleaded petrol, we have an under-recovery rate of about 99 cents per litre. And we do know that there's the 20 cents per litre in levies that has to kick in from early April. So at this stage, it's looking like we're going to get another sharp increase in fuel prices in April, which of course isn't exactly good news for consumers.
What some people call the poorest of the poor eat bread, and they eat cereal. Now, if you look at the prices of both those items, they have continued to climb. What does that mean for that category of citizens?
Yeah, that's absolutely right, because when you look at lower income households, it's true that they tend to spend a greater proportion of their incomes on food. And on that front, there was some stability at an overall level. But you're right, when you look at the bread and cereals category, we saw a very big increase actually between January and February. And going forward, we suspect that we may continue to see upward pressure. And the problem here is that the dry weather conditions that we've had in some parts of the country, particularly in the Free State and in the Northwest, important maize growing regions for the country, have put some upward pressure on crop prices, and we're starting to see the delayed effects of that kicking in, and we think that food price inflation could actually continue to go higher going forward.
Well, that's all we're going to leave it for today. Thanks very much for coming through. ABSA economist Miyelani Maluleke.